Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Well, Jim, I'm heading off to Vancouver for the Metals Investor Forum conference that will take place Friday and Saturday, May 11th and 12th. My session is on Saturday at 3:20, and there are two uranium exploration companies in my session, CanAlaska Uranium and Forum Energy Metals. Westfault Mining, my favorite gold proxy junior, and then a company that's fairly new to my audience, Nevada Organic Phosphate, which has an interesting story.
John, the conference has moved from its usual spot at the Hotel Georgia Rosewood to the Paradox Hotel, right?
Yes, this is a bit of an inconvenience for everybody. They're going to have to figure out it's to the west near Thurlow Street, and it has some peculiar entrance. So hopefully people check this out. Go to the website. By the way, you do need to register for this conference. It is free, and I recommend going to the Metals Investor Forum website, registering, and checking out the directions on how to get to the Paradox. The Rosewood, unfortunately, its renovations were not ready in time for this conference.
John, why do you believe this is a pivotal year for CanAlaska Uranium?
I had CanAlaska Uranium at the September 2022 Metals Investor Forum conference in Vancouver after they had intersected high-grade basement-hosted uranium mineralization at its West McArthur project in the Athabasca Basin of Saskatchewan. And the whole context was, wow, okay, we've got high grade in the basement. It looks like the Eagle deposit of Cameco. Corey Valek had worked on that project, so he saw, oh, this is really good. But the quest has been to go up and find where this feeder structure, this hydrothermal system, intersects with the unconformity between the sandstone and the basement. And that's where you get very rich, small, but very rich deposits like West McArthur, which was a string of about 6 of them. Small deposits, but running 16% U3O8 and representing about 700 million pounds of uranium. And last year, I had CanAlaska Uranium as a favorite, and I was kind of disappointed because their follow-up wedge drilling got snippets of high grade in the basement here, but they did not really get anything at the unconformity. So I dropped them back down to bottom fish status at the end of last year, but I reinstated them as a favorite after they published a phenomenal intersection that included 4.7 meters of 40% uranium, U3O8. And that's with these radiometric readings. The geochemical assay, when it's that high, may even be higher. But what was important was this was right at the unconformity, and they drilled 2 more holes in the winter part of this season and reported assays for them. The first hole overshot because there was a displacement fault that dropped the basement down on the far side of this unconformity, this south C10 corridor. But the third hole that they drilled, they did hit high-grade mineralization. So they have a pretty good understanding of where this unconformity is and where they need to march the drill. All the 3 holes that have intersected this unconformity area, they're all basically just one fence of holes. They now need to march a series of short step-out fences along the strike of the unconformity, and that's what's going to start in July. They shut down in April with the spring thaw coming. Difficult to move around when everything's soggy and melting up there. They have a $7.5 million budget out of a $14 million treasury that they will be deploying to start delineating this zone. And the market's in such a bad mood in general that the stock has not really gone up the way I would have expected at this point, because they figure, well, they've just hit this 2-dimensional zone. Until we see the 3 dimensions start to evolve and see the grades and start seeing the pounds of high grade evolve, then the market will start to respond. And I've done a sort of number crunching outcome visualization, imagining the West MacArthur 2 zone of 1 million tons of 16%, and they found something like that, and mind that would have an NPV of about 6 billion Canadian dollars. So we're talking a stock that could go double digits later this year. So this is a pivotal year. The Pike Zone, they've been working for a number of years. They are now at 83%. Cameco is stuck once again not participating, so they'll dilute some more. But the context is such that there is another potential MacArthur River scale deposit. It doesn't even have to be quite that big. Yes, it'd be nice if there's a string of pearls like MacArthur River there, but all they need is one big 100 million pound plus deposit at grades of 5-10% or higher, and they're off to the races. So yes, this is going to be a pivotal year for CanAlaska Uranium.
What do you believe Forum Energy Metals will accomplish this year?
Forum Energy Metals staked the Aberdeen project in Nunavut near the Thelon, on the southeastern edge of the Thelon Basin. Now, the Thelon Basin is very similar to the Athabasca Basin, similar in size, and it's the same kind of sandstone cover with basement granite rocks underneath, and the area has been subject to the same sort of hydrothermal systems as the Athabasca Basin that have created uranium mineralization both in the basement and presumably at the unconformity where the sandstone still exists. Now, most of the property that Forum staked, it is on the granite exposed part. The sandstone has been eroded away. But they completely surround the Kigavik project that Orano spent over $150 million on to take to a production certificate approval in 2011. They have several deposits there that average about 0.54%, so it's not the high-grade Athabasca Basin style of uranium, but these are going to be open pittable and 133 million pounds. And then they were on the verge of getting this certificate, and then Fukushima happened, and the regulator said, but we want a specific timeline for development of this. And of course, with the uncertainty created by Fukushima, Japan shut all its nuclear energy plants, and then Germany decided that uranium nuclear energy is bad, and much better to be dependent on Russian gas and burn dirty coal, and they shut down their nuclear energy industry also. So we've had pretty much a 10-year bear market for uranium. So Orano just said, okay, we cannot commit to a timeline, and so that project is basically frozen. Now, Cameco had probably spent $20 million plus on the ground to the southwest, and they eventually they had the main deposit that they discovered where Forum Energy is now focused. It's about between 80 and 180 meter depth. It's not large. Its tonnage footprint is about 2.5-5 million tons, and the potential uranium in there is maybe 25, maybe 50 million, depending on 0.5% or 1% U3O8, and that ended up not being big enough for Cameco, so it let the claims lapse. Forum Energy moved in, has expanded the land position to include some of the sandstone cover to the north, and this year they are starting a $8.5 million program to explore a series of targets that they have developed with something called ambient noise tomography, ANT or ANT for short. And what they have is a large, a 700 by 1,500 meter gravity low. And gravity lows are important in this setting because it means there's been a lot of alteration within the rock, which has made it less dense. And there are several structures going through this gravity low. And what the ANT survey did, it allowed them to see the density variation in the third dimension. So they have seen how the main zone repeats along that key structure with a number of about 3 or 4 additional types of zones where the rock has been rotted by hydrothermal activity. And of course, it's all blind from surface because it starts at about 80 meter depth. So they will be starting a series of holes, testing first the west zone, which has not been properly drilled off, and then testing these targets. And this could be a very big deal because that 25 to 50 million pound potential of the main zone, that's not good enough by itself. If that's all they end up with, maybe one day when Orano decides to get Kigavik going again, they may acquire that and add it to it. But really the goal is to get this into the 100 to 200 million pound range of 0.5% to 1% U3O8 that can be open pit mined. So this is a big year. They're not going to be able to deliver a resource estimate because this is an exploration year. It will set the stage for a much bigger program next year. It's 10,000 meters they got planned for 30, 40 holes. And they are waiting for the results of an ANT survey on a structure that has the Ned and Bjorn gravity low anomalies. This is along a structure that sits on the sandstone. And it's at the unconformity between the sandstone and the granite that you can get the MacArthur River type grades. And we haven't seen those types of high grades up there yet, but this is a potential surprise. Later in the year, the bread and butter is to demonstrate that there is also a string of pearls along the same structure that hosts the main zone and get this open pitable sort of 0.5% to 1% U3O8, get it up into that critical mass. But the blue sky surprise is if the Ned and Bjorn turn out to be higher grade deposits in that sandstone covered part in the northern part of the property.
Why do you see Westvault Mining as a leveraged bet on the price of gold?
I have had Westvault Mining several times at the Metals Investor Forum conferences in the past couple of years. And what I like about the company is that they have the Hasbrook project. The pre-feasibility study is done. It was updated in early 2023, so much of the inflation that we experienced in recent years has been caught up. And this would produce about 561,000 ounces over 8 years, about 71,000 ounces a year. It would be open pit, heap leach type operations. It's just to the west of Tonopah in Nevada. And the company has decided we are going to wait for market conditions to be right for somebody, a mid-tier producer, to come in, consolidate the district, likely buy us out first and make us the starter operation. There is exploration potential still left in the ground. They're not going to spend money. They're just going to, pay the basic costs to keep the claims alive and wait for things to happen. Now I had them at them in my January conference, and my question, okay, everybody should know about it. Well, in January, gold was still doing its thing, wondering if 2,000 is the eternal ceiling. Since January, gold has surprised the market. The typical gold bugs have not been buying gold. They've been busy dumping their GLD ETF to go buy Bitcoin. But it turns out this buying pressure that started last year and took gold to $2,400 briefly in April. This is all coming from China at all levels, from sort of retail level consumers to high level speculators. They have been gobbling up physical gold. They have been the primary drivers. And you'll see in the morning, it's London's price fixing is actually reacting to what happened on the Shanghai exchange in China the night before. Why is there this Chinese interest in gold? Well, they're worried about their own currency. It's undergoing depreciation. There's a risk that China will let it drop even lower. They have all their real estate assets sinking like a rock and no clear vision as to what's going to stabilize that. And they've been unable to stimulate a domestic consumption economy. So there's concern within China. Now, we should be buying gold too because we have this geopolitical conflict between the global East and the global West. We have the possibility that we have an isolationist Trump administration in power in 2025, where then the rest of the world's desire to deal with the U.S. dollar diminishes drastically, and collectively interest in gold will go up, not Bitcoin, because Bitcoin is just a couple of digital ones and zeros denominated in U.S. dollars. So what good is that if suddenly the U.S. dollar is shrinking down to being a much smaller part of all the trading currencies in the world? So there's reason for us to also, in the rest of the world, to also be buying gold to hedge against this uncertainty that lies ahead of us. And even if Biden ends up still in charge, this geopolitical conflict is not going away. Russia is ramping up its hostility. It's practicing with sabotage in Europe. The Ukraine situation, we have half of America not supporting the Ukrainians. They prefer the heel of Putin's boot over freedom. So this is going to increase demand for gold. And for Westphal, you take the numbers from the pre-feasibility study, and I've done a discounted cash flow model using all their assumption, and I've run it up to as high as $4,000. Now, this stock sits there at $1. It has about 60 million shares out. At $4,000, if there's no significant inflation, but it's just a reaction to the changing geopolitical structure of the world, at 5% and 10%, the value after tax net present value is $16 to $20. At the current price of about $2,300, the NPV is $6 to $8, depending which discount rate you use. So right now, the stock's sitting at $1 because the Western markets do not believe that $2,000 is the floor and $3,000 to $4,000 is the range coming up, a real price gain, not just a inflation adjustment. So the stock is sitting there. So for people like myself who want to hedge against the world taking a turn that's not particularly pleasant, you just buy this stock, tuck it away, and just watch the price of gold and know that the higher the price of gold, the higher the value of this company becomes. Now, it sits here now because nobody believes anybody has the will to take out this company and develop this. But at some point, when the Western markets start to believe that that we are in a gold bull market, there'll be all kinds of financially engineered new companies invented by Wall Street and Bay Street to go out there and consolidate deposits like this and turn them into mines. And that's when you see Westphal very rapidly suddenly be a $2, $3 stock and then a $3 to $6 stock. And because the people who are buying it are literally treating it like a gold vault, you're not going to see the paper come out. So this is right now is a perfect time to buy Westphal Mining as a leveraged proxy on the price of gold. A 25% increase in gold from these levels would be an perceptual inflection point. If you own gold, you're not gaining very much. But if you own Westphal, now you're looking at 500 to 1,000% gains in response to such a modest percentage change in the price of gold.
What is Nevada Organic Phosphate trying to accomplish?
Nevada Organic Phosphate has an application for phosphate leases in with the BLM in northeastern Nevada. Now, these phosphate beds, they're part of the giant Western Phosphate Field, which goes all the way from Montana through Idaho, parts of Wyoming and Colorado, and parts of Utah. And just the very western fringe of it passes through northeastern Nevada, and it goes right past a rail line. It's only this Leech Mountain range, which is the within which the Murdoch Mountain itself sits. Those beds, they're only 2 to 4 meter wide. They've been known about since the 60s, but they've just been a geological curiosity because the grade is only 10% to 20% P2O5. In Idaho, the grades run 20% to 35%. And in Idaho, phosphate beds have been mined for more than 100 years, open pit mined, and often, like in the past, there were no environmental standards whatsoever. Much of this area is a mess. But of course, with the high grade, nobody was ever interested in these thinner, lower grade beds. But there is an important difference between the phosphate beds in Idaho and most of the rest of the Western Phosphate Field. And that is that those high grade beds have a very high heavy metal index. In fact, they are way above the maximum levels for heavy metals like arsenic and cadmium and all these other baddies that the government has said you cannot put fertilizer on fields that have heavy metals above these levels. So this means the phosphate beds in Idaho have to be chemically processed with acid to make into MAP and DAP, which is the standard phosphate fertilizer that farmers put on their fields. And the processing removes or reduces the heavy elements below the maximum limits that the government imposes. But because it's processed, none of this fertilizer can ever qualify as organic. Now, 30 years ago, nobody cared about organic. This is a relatively new phenomenon. And the new business idea that Robin Dow's team is bringing to Murdoch Mountain is, okay, this cannot compete with regular phosphate beds for the standard fertilizer market, but there's something special about these beds. These beds, their heavy metal content is 1/10 of the government limits for what is present. So their plan is to demonstrate that these 2 to 4 meter sheets are reasonably continuous and that this heavy metal content is stable at the consistently low, and then they would underground mine it like a coal seam and basically just grind up the phosphate and bag it as a whole ore product. Because that's all they're doing to it, it will qualify as organic. Now, the organic market is a much smaller portion of the big ag fertilizer market, but there are not many sources like this in the United States to serve that market. So the thing with phosphate deposits in the United States, you have to apply for a special lease. So for the last couple of years, the process was started before COVID, and then COVID came along and messed up everything. Earlier, things got messed up because of the sage-grouse withdrawal. They turned this whole area into a study area to see what the sort of great sage-grouse habitat situation is. That has been subsequently lifted, and now what they have had to do is fund an environmental assessment, which becomes the basis for the BLM granting these phosphate lease. And they've got applications now surrounding that whole Leech Mountain range, because while they were waiting for all this, they did some homework. Gary Smith did homework from old archives from past gold explorers and so on, and realized these beds peak outcrop in a number of areas around that. Now, what's in the middle is too deep and nobody cares, but they've got applications now for all the non-patented ground that isn't leftover from the railway land grants, where every odd-numbered mile by mile square was granted within 20 miles of the railway that Santa Fe built. That's all now in private hands, and where the mineral rights sits is very difficult to find out. But if they get approval for these leases, right now they're the important ones where they are at the southern end by Murdoch Mountain. They will start a drill program to demonstrate what the thickness of these beds is, what their angle of dip is, and set the stage for a resource estimate. And then ultimately, when they can demonstrate that this is actually all there, get bought out by one of the big agriculture or fertilizer companies who wants a secure supply of this material for serving the organic fertilizer market. And so this is very different from load claims where you just stake the land, and then if you're first one there, you own it. Yes, you have to apply for a drill permit and do studies and things like that. And then if you want to develop anything, it's a much bigger deal, permitting deal. This is going to be simple. The obstacles primarily front-loaded, which is why it is a risky stock, because the BLM could decide, nope, we're never going to grant phosphate leases in this area. That's why the stock's sort of 5 to 10 cents. It's in a waiting mode, but the upside is substantial once those permits are granted, and we're just waiting for them to kick off the comment period where they basically said, yes, we have everything's acceptable. Now we let everybody else weigh in on whether or not this final approval should be granted.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.